Good afternoon. Happy Sunday. Hope everyone's having a great weekend. We got a lot to unpack here to get ready for the week ahead. We got a lot of events. We got economic data to go over. We got a lot of the indices to cover, sectors, you name it. We got it all. But without further ado, let's just go ahead and jump into it. I know you're busy. I'm busy. Let's just dive on in and make it look. All right. Last week, it was all about the jobs data. We had our ADP non-farm employment, which came in lower than the expected readings there, 54,000 on the ADP versus 73,000. We also had the government readings through the Bureau of Labor Statistics. That came in at 22,000 versus 75,000. Unemployment rate upticked ever so slightly from July to 4.3%. And we also had our services PMI. And yeah, so what all that has been telling us is that we continue to see softening of the labor market. We are also seeing softening in manufacturing. We've been knowing that. Services, yeah, plays an important part, especially when it comes to the GDP. That saw a little bit of an uptick. But again, hiring being a little bit of an issue altogether. So we're seeing this interesting backdrop within the entire economy where we're getting, steady moves here and there, but we're also seeing a slowing down of job growth. And we even see that with the revisions within the BLS numbers, where they revised it down from like plus 14,000 to negative 13,000 for July. So the revisions continue to steadily move lower, and I'm sure you've seen graphs throughout. If you log on to X and look at some of the economic data, you'll see a bunch of these charts where the job growth has just been absolutely crazy. So or lack of job growth, at least. So yeah, we continue to see this steady move down as far as employment and jobs. We're seeing the backdrop of sticky inflation. I mean, it's a tough spot to be, when it comes to the Fed. So yeah, we got the September meeting coming up, not this week, but the following week. We are expecting rate cuts at that meeting, only 25 basis points, nothing too serious, but nonetheless, we are expecting a pivot from the Fed, and, we'll get to that, when it comes. So moving on to this week's data. Last week was all about the jobs data. This week, it's all about the inflation data. Starting on Wednesday, we have PPI, followed by CPI. On Thursday, inflation is expected to uptick from 2.7% to 2.9%. Yeah, that's going to be the big readings of this week. You definitely want to be paying attention on Wednesday and Thursday morning for those inflation datas. So with that being said, I'm not going to spend too much time on that. Let's just go ahead and jump into the charts. Oh, not to mention, we do have an Apple event on Tuesday. Let's not forget about that. We'll go ahead and throw that into the economic calendar, but it's just an Apple event, Now, the last few Apple events have been disappointing, especially if you're an Apple user. And, if you're an Android user, these events are just hilarious. Tim Cook has said that this year's event is going to be all dropping. So anything not spectacular and amazing is going to be a bad look, especially for Tim Cook and Apple. So we'll see what they got up their sleeves. Probably another iPhone. Yeah, who knows? But we'll see. That the event's on Tuesday. Pay attention to it, and we'll see what happens. But anyway, let's go ahead and jump into the charts. First, we're going to mention, on the left-hand side is your weekly chart. On the right-hand side is the daily chart. I wanted to do this to kind of illustrate the longer-term, bigger picture here as far as the whole market goes, because, yeah, the market's been, I wouldn't say hit or miss. A lot of the, especially when it comes to tech has been lagging, but the majority of names, industrials have been really good. Financials have been really good up until Friday. So tech has just been kind of the main soar here recently. So SPY's doing pretty well. We do have the nice bullish backdrop, and you're going to see this throughout all the main indices. We are still trading within the backdrop of a very nice bullish reading here, especially on the weekly chart, just making higher highs. The daily chart continues to make higher highs and new all-time highs on the SPY. Yeah, I mean, Friday's candle wasn't the greatest, but the weekly chart still looks pretty constructive, pretty bullish here. Nothing too spectacular. If we move to the Dow, I would say leadership remains within the DIA and the IWM. Still trying to break above 458 on the Dow for a push towards 463, 465. And as long as the Dow continues to hold 450, the market still looks pretty good here. And, think of the Dow as like the child between the SPY and the QQQ. So that's what the Dow is pretty much. So, but as long as it's holding 450, which is the prior all-time high, still looks pretty good. The IWM actually had the best looking weekly candle out of the whole indices last week. So small caps, yeah, they look pretty constructive. And it's hard to be bearish on a market like this when you have broadening out like we've been seeing, especially with the small caps. Now, the main question with the small caps is, can it break above this 244.50 mark, which it's had trouble in the past breaking over? This goes back all the way to COVID. Can she finally break out? So we'll see when that time comes. But, like I said, it's hard to be bearish on this market when even the small caps are performing pretty well out there. And like I said, things have pretty much rotated out of tech, or slowed down in tech world, especially semiconductors and software. But when it comes to everything else is doing pretty good here. So to me, the market still looks like it's broadening out, and we can even look at the bonds. This is the HYG. This is your junk bonds, and even the junk still looks pretty constructive here. And you can think of the HYG as a measurement of risk appetite, and this still looks like it's making higher highs here. So it's hard to be bearish on the market when even the junk is looking pretty good. LQD, which is your higher graded bonds, had a nice move. Now, if you're like older and you have a lot more invested in bonds, you're definitely rejoicing this move here. So, I mean, yeah, even the LQD, the junk bonds, they all look pretty good. We can take a look at the VIX. I mean, the VIX is still pretty much hanging out in the basement here, so I'm not too overly concerned. I could throw in a squeeze here and just kind of take a look at the weekly squeeze. We can see that it's starting to flatten out on the histogram, and that's something that we could pay attention to, but I don't think it's quite ready just yet. Let me grab my drawing tool and I'll show you what I'm thinking about. You see how back here this started to, let me grab a better color so you can see it. You see how back here this histogram was cooling down, and then we got the pop right here. If we overlay that to where we are now, it's this histogram hasn't quite flattened out yet for that pop to the upside. So the VIX doesn't seem like it's ready just yet, maybe in a few weeks or so. So that could be something that we need to pay attention to. But as it sits right now, I don't think it's quite ready. The VIX is still just kind of hanging out in the basement. We'll continue to monitor it, of course, but if we put it on the same time frame as what happened back here, I don't think it's an issue just yet, but something to keep an eye on nonetheless. So that's the VIX. That continues to be muted. When it comes to the sectors, yeah, semiconductors, they continue to be a little muted. You got this, sideways movement for the past several weeks since July, really. Needs to clear 302 to even remotely be back bullish. But I mean, we've seen NVIDIA come down to retest support at 165. It's held for now. As long as NVIDIA holds above 165, I think you're okay. But if you start to lose 165, I think you could come back down to 153. But if you're a bull, you want to see this thing break back out and get above 184.50. AMD had a little bit of an ugly breakdown. TSM had a pretty good move. TSM needs above 248.30. Broadcom had their earnings report. A little bit of profit taking there, but nonetheless, Broadcom looks fantastic. TSM looks fantastic. NVIDIA's holding where she needs to. So that's kind of the key things I would keep an eye on. But, when it comes to some of these sectors here, builders still look pretty good. We're still looking for a breakout over 93 to push towards 95 and 98. 98 will be your big level of resistance at all-time highs. If we look at other sectors, communications continues to look really solid here. Google especially has been your breadwinner here, so Google looks fantastic. XLY continues to look pretty constructive, nice looking chart. Amazon had a pretty good day on Thursday. Still looking for that breakout over 235. We did get that little bit of a close on Thursday, but then we had an inside day on Friday. So Amazon could still very well be a good watch for this week. So Amazon, Tesla also looking pretty juicy. Had a good day on Friday on increased volume. Over 355 sends you to 367. So that could definitely be a really nice play this week. XLF, a little bit of a disappointing. They've kind of hit this one pretty big. Semiconductors have gotten hit. Software has been hit. Now they're hitting financials. If they start hitting industrials, I might be a little bit concerned then at that point. But as it sits, a lot of the main sectors are still looking pretty good, especially outside of tech. Industrials still look good. Builders still look good. XLV, this one could be interesting, and it would make sense if they started to, they mean big money and all the banks, hedge funds, if they started to rotate back into healthcare, this would make sense to me since they've already hit financials and all that on Friday. I would want to keep an eye on XLV. You got this head and shoulders pattern that, has been marked out for a while now. You're retesting this neckline at 138. If they can break above this, that sets things up to be pretty interesting. And then you could probably talk about, getting a move back up to about 150 on the healthcare sector. So if we rotate into healthcare, you could catch a nice little move here, but we want to see a daily close over 138 at least. Get back above that neckline and then hold it for push over to 150. Now, there's still plenty of really good looking charts out there. Here's my list here. CLS, URI, you name it, TLN, Home Depot. And I'm going to show you some of my favorite names here, especially when it comes to, first, we talked about Tesla earlier. Over 355 gets you 367. Home Depot looks pretty constructive as well. You had a nice push on Friday over 417.30. Looking for 428. We got CLN, not CLN, TLN. Looking for a push over 394. Over 394 could send you to 400 and the 405 there. CRH, I believe, is what the other one. Yeah, CRH. This is a building materials provider. A break over 114 looks very nice for a push towards 120. There's so many good setups. Hood got introduced into the S&P 500 on Friday. We'll see how that holds up. Usually it you'll see some profit taking, but you got some China names in here such as Baba. Baba needs over 139. Now, I'm not the biggest fan when it comes to China names because they do this gap up and then they sell off, they gap up, they gap down. They're very, very gappy. They're very hard to really get a nice edge on. But over 139 does kind of pique my interest. Over 139 could give us to 149. When it comes to a name like Baba, I would first of all not play full size. I would reduce my size just because of all the gaps that tend to occur within Baba. And then you just never know what China is going to do. Are they going to pump the market? Are they going to slow things down? You never know when it comes to overnight news with China. So you reduce your risk size when it comes to names like this. But Baba looks pretty good. You also got Baidu in the mix as well. Let's see. We also have Nucor. That looks pretty good here as well. Nucor needs over 151 for a push towards 158. I definitely like that. SE, there's BE. Toll Brothers. Here's SE. Yeah, look at this. Big, had a crazy day on Friday and nice wick bullish push up. Still looking for some move up to like 200 or so. Don't mind that at all. We're already in SE, so I'm not going to cover too much on that. Some of these oil refinery names, Marathon, you got VLO, looks pretty interesting, especially if you're looking for some energy names. VLO looks pretty good. PSX could also potentially be a player, but PSX needs above 135. But yeah, lots of good setups still remain in the market. It's not as though we're doom and gloom by any means. There's still a lot of very solid setups. Sectors still look pretty good. IWM looks great. The Dow continues to look great. QQQ just a little laggy. QQQ laggy here. Apple event on Tuesday could make things interesting, but this week it's all about that inflation data. We got to pay attention to it. We got to know what's going on with our economy and where things sit, especially when it comes to our rate cut odds and what those rate cuts mean overall and what the Fed might potentially be up to. But that's going to be it for today's video. Enjoy the rest of your Sunday. Go watch some football. Have a wonderful, wonderful day. I'll see you guys tomorrow for the market opening. And yeah, have a good one. Take care. Bye-bye.